Hi, my name is Marc Chaikin. If you suspect a market crash is around the corner, I'm here to tell you that your suspicions are correct. In fact, I predict we'll witness a crash of epic proportions during President Donald Trump's second year in office, 2026. But this crash will not take place because of the reasons you might expect. It will have nothing to do with the dozens of executive orders President Trump has signed, his threats to impose tariffs, inflation, the rising national debt, or any other concern you might have seen in the mainstream financial press. No, instead, it has to do with a very specific market cycle that has worked like clockwork since the 1930s. It's related to where money is flowing and investor psychology. This cycle is exactly how I knew when stocks would fall during President Trump's first term. The market actually fell hard in 2018. Exactly how I knew when stocks would fall during Joe Biden's presidential term. The stock market crashed 20% in 2022, and how I know stocks have a 90% chance of doing great this year in 2025 before falling in 2026. In just a minute, I'll explain how I know this. I'll also show you when this crash of 2026 is most likely to occur and even the exact day it's most likely to take place. And as I'll detail, this data-driven cycle is critical for anyone with money in the markets. That's why it's been studied by nearly all the top brokerage houses, T. Rowe Price, Morgan Stanley, Charles Schwab, and Goldman Sachs, just to name a few. You can almost set a clock to it, probably because it's backed by more than 100 years of real-world data and market performance. Now, I know there's a lot of conflicting information being thrown at you by the mainstream media and the so-called market experts, but please, I want you to pay attention to the data, not the people on TV. And I say this as someone who's been trading the markets longer than just about anyone besides Warren Buffett. I got my broker's license on October 7th, 1966. And since then, I've invested through 9 recessions, several massive market panics, and more bull markets than I can remember. And over all of these decades, there's simply nothing I found that works better for timing the markets than the cycle that I'm going to share with you for free over the next few minutes. But before I go any further, I need to make one thing clear. The cycle I'm about to show you is not my own proprietary discovery. In fact, just the opposite. It's also been used by the world's best investors, including George Soros and Stanley Druckenmiller, because of its incredible predictive powers. But few people off Wall Street have ever heard of it. Today, I want to explain everything you need to know and exactly how this cycle works, including how it has accurately helped me chart nearly every twist and turn in the stock market in recent years, and why this incredible cycle's foretelling of a crash in 2026 is not a cause for alarm. Not at all. In fact, it's a reason to be very bullish on stocks for the next 12 months at least, and possibly longer, depending on when you receive and act on this message. That's why today, I'm also going to tell you what to buy right now, and I'll give you the name of one of my absolute favorite stock investments completely free. I'll even explain where you should shift your money in 2026 when the next crash does occur. But what's important to keep in mind here is that no matter what President Trump does between now and then, it doesn't really matter. The coming crash has nothing to do with his policies or even winning the election. In fact, people on both sides of the political aisle won't like me saying this, but the same stock market rise that I'm predicting for 2025 and the crash that I believe we'll see in 2026 would have happened even if Kamala Harris had been the winner. Now, I know that probably sounds hard to believe, but I'll prove it to you in just a minute. You see, the seeds of this stock market rise in 2025 and market crash in 2026 were planted more than 100 years ago. So what's about to happen in 2026 is, in my mind, inevitable. I'll tell you the exact day the next crash is most likely to begin. For now, I'll just give you one hint. It's on the 16th of the month. We'll talk about the most likely month in just a bit. But before we get to that, I want you to understand that between now and then, you're likely to experience one of the greatest money-making opportunities of your lifetime. The kind of market frenzy that stands to completely change your financial situation before the year is over, if you position yourself accordingly. Now, I know that's difficult to believe, but taking advantage of the stock market cycle I'm going to share with you today is what helped me warn my followers of a looming market crash during President Trump's first term in office back in 2018. It's what helped us get into stocks in 2020 before stocks soared 41% following the COVID-19 crash. It's this cycle that in March of 2021 helped me encourage folks to not sell their stocks when so many were panicking. It helped me advise folks to sell stocks in 2022, however, before we experienced the worst year for stocks since 2008. And it's how I predicted a new bull market back in January of 2023, before stocks went on to soar 24%. And it's because of this cycle that I told my followers to stay in the market in 2024 with expectations that we'd see stocks soar 18% before the end of the year. Well, it turned out I was too conservative. The market actually rose 22% last year, which beat the expectations of every single institution on Wall Street. Now, I know you're probably shaking your head. After all, what I'm telling you defies all the conventional wisdom you've heard about the markets over the year, that you have to worry about not only presidential policies, but interest rates, inflation, government debt, et cetera, et cetera. But I'm here to tell you that none of that stuff matters for the stock market in the way most experts believe. So why have you been told for decades to grit your teeth and buy and hold when these short-term market shifts are so extreme and so extremely predictable? Now, that's a fair question to ask, and probably the most important financial question of our time. Today, I'm going to answer it for you and show you a much better, more lucrative way to invest your money with far less risk. Now, I know that's a big claim, so let me show you how I figured this all out and how I have used it to defy the odds and help folks make incredible gains year after year. As I mentioned earlier, my name is Marc Chaikin, but what I haven't told you is that I'm a quant. When I got my start on Wall Street more than 50 years ago, there were only a few of us quants out there. Now, if you're not familiar with the term quant, it's the nickname for quantitative analysts who use math, finance, and computer skills to create models for stocks and other financial assets. My first breakthrough as a quant occurred in the 1970s when I was working with a brilliant analyst that most people have never heard of, G. Stanley Burge. We were doing things in the stock market nobody had ever done before. The New York Times even wrote a story about the work we were doing in 1976 because so many traditional economists were getting market calls completely wrong during that time. For our work, we were both featured in the book Technically Speaking, which is about technical trading in the 70s, 80s, and 90s. Now here's Stan on the back cover, and there's me next to my old friend John Bollinger, inventor of the famous Bollinger Band's technical analysis tool. Stan taught me so much. He was named the top stock market strategist by Institutional Investor magazine 4 years in a row. And before long, Stan asked me to lead a new department focused on something very new to the financial markets, options. My eventual expertise allowed us to win business with big institutions like Chase Manhattan and Citibank. In fact, I went across the country teaching our 300 stockbrokers everything they needed to know about options. And finally, in 1979, I created one of the first daily computerized programs on Wall Street, which generated trade ideas every morning and delivered them via teletype straight to our 20 offices before the markets opened. At the time, this was groundbreaking, which is why I was profiled on the cover of various magazines. And this is why some of the most famous investors in history, like Paul Tudor Jones, George Soros, Steve Cohen, and Michael Steinhardt, all started knocking on my door. These investors all came to me for one simple reason. I'm a fanatic about data. And frankly, that's the major reason nearly 1 million people in more than 148 countries continue to come to me for my market insights 50 years later. Remember my mantra, follow the data, not the so-called experts on TV. This is why in January of last year, when Business Insider came to me to ask what I thought 2024 would hold for the stock market, my answer surprised them. At the time, many analysts thought the gains we saw in 2023 were about to come to an end. One economist even predicted it would be the biggest crash of our lifetime. But not me. Take a look. In fact, just 5 days after Business Insider interviewed me, I doubled down in a note to my followers with my more specific forecast. By summer, stocks were up exactly 18%, and they were up 20% by the end of the third quarter. Now that's the strongest year-to-date performance of the 21st century. But of course, that was just the average of the entire market. While the S&P 500 rose a total of 22% by the end of 2024, many stocks performed much, much better. So how did I know that 2024 would be a fantastic year for stocks? All the way back in early January of that year. Well, one correct market call certainly doesn't prove anything. That's why I'm about to reveal everything, including how this cycle helped me accurately forecast not only 2024, but 2023, 2022, 2021, and even 2020, despite a historic pandemic and global lockdowns. As I mentioned, while this cycle isn't well known among the investing public, it isn't a secret on Wall Street. That's why one of the world's best investors, Jeremy Grantham, the chief strategist at GMO, says it's very hard to bet against it. And it's why Liz Ann Saunders, chief investment strategist at Charles Schwab, told one reporter the pattern is quite remarkable. And the big reason I'm telling you all this is because I believe that millions of Americans are about to make make that two tragic mistakes. The first big mistake is that most folks are going to miss out on one of the best opportunities to make money in stocks you'll ever have in the next 12 months before the crash I anticipate will arrive in 2026. Now, that's despite the fact that the cycle I'm about to reveal gives us 90% certainty that 2025 will be a great year for stocks. And I'll show you why in just a moment. The second big mistake most investors will make is that when the inevitable fall does arrive in 2026, many will hold on to the bad stocks and watch large portions of their savings simply disappear. Now, please don't let that be you. I want to show you a better way to handle these uncertain times. First, let's get into the specifics of how this incredibly powerful stock market cycle works and how I've used it in the past to help my followers take advantage of the market's big rallies while sidestepping each crash along the way. And most importantly, how I'm estimating exactly when this bull market will end and how much time you have before taking some profits off the table. Frankly, this little-known stock market cycle is something every American should use. It's known in some circles as the election cycle. And if you've never heard of it, I'm not surprised. After all, Wall Street likes to keep the biggest and most lucrative secrets for themselves. And just to be clear once again, I didn't discover this cycle. It's been used for more than 100 years. But I learned to use it during my 50 years on Wall Street, and I truly believe it's one of the most powerful and lucrative secrets in the financial world. Because while this cycle might be unfamiliar to most small investors, nobody, and I mean nobody I work with on the street, disregarded the impact it has on the U.S. stock market. I'll show you how it's played out over and over and over again over the past 100 years, and why it gives me the extreme confidence that we'll see terrific gains in the market this year before stocks crash during 2026, the second year of President Trump's new term in office. Now, if any of this sounds confusing, don't worry. It's simpler than it sounds. And that's the beauty and elegance of this secret and why I've profited from it for so many years. In its most simple form, the election cycle refers to the very specific way that history has shown U.S. stocks to move up or down in each year of any four-year presidential term. For example, why did I tell Business Insider last January that 2024 would be a great year for stocks? Because of the election cycle. And no, I didn't know President Biden would drop out of the race, and I had no idea who would go on to win the election. Remember, it simply doesn't matter when it comes to the stock market. But based on more than 100 years of data, I did know that historically speaking, election years are great for stocks, thanks to the election cycle. In fact, I was probably the most bullish person on Wall Street in January of last year. Just consider the year-end price targets that Wall Street's most famous banks and strategists were predicting at the time, compared with where I predicted it to be at year's end. Now, I'm not saying this to gloat, and again, an accurate prediction for 1 year means absolutely nothing. I'm pointing this out because I was not making an election prediction per se. I didn't need to know who would be on the ballot. I had no idea who would win. All I needed to know was that based on more than 100 years of data, election years are almost always great for stocks. Now, why is that the case, you might be wondering? Now, a lot of research has been done on the subject, but possibly the most exhaustive research comes from Yale Hirsch, the publisher of the Stock Trader's Almanac. Hirsch studied the situation going back to 1833 and said it's because incumbent administrations shamelessly attempt to massage the economy so that voters will keep them in power. What's more, Hirsch also calculated that since 1949, the market returns almost twice as much during election years when the incumbent is running. In fact, the average gain for all election years is just 5% over the past 75 years. But election years when an incumbent was running for re-election, the average was nearly twice that for the market, no matter who wins. Now, the point of my presentation today is not political. No one knows exactly why markets make similar moves over more than 100 years of history. But as I said earlier, if there's one thing I've learned in my 5+ decades in the market, it's this: focus on the data, not the so-called experts on TV. And once you see the data behind the election cycle and how to track it yourself, I think you'll realize two things. First, that 2025 is poised to be a great year for the stock market. And second, that we're extremely likely to witness a market crash next year in 2026, the second year of President Trump's term in office. Now, I'm betting many will probably try to blame the president when it happens, but it won't be his fault. Not in the way that most people will claim. Remember, the election cycle proves it simply doesn't matter who's in office. Now, let me show you some of the ironclad data that allows me to be so confident in my prediction by following this incredible election cycle. So allow me to explain. Every U.S. president has 4 years in office, correct? With this cycle, we refer to the first year as year one, or the post-election year. That's the year we're in right now, 2025, since Donald Trump defeated Kamala Harris last November. Now, once again, before folks start sending me angry letters, the outcome of the election doesn't matter for the election cycle. What matters is the year. Now, you can think of the election cycle as bipartisan. It isn't emotional about who wins or loses. Next year, 2026, will be year 2 of the election cycle. Then 2027 will be year 3 in the election year cycle or the pre-election year. And then finally, 2028 will be year 4 or election year. Okay, so why does any of this matter? Well, because over more than 100 years of recorded data, certain years of the election cycle see much, much better stock market returns than others. And other years are statistically much more likely to see big market downturns. In fact, the numbers are staggering. Check this out. In the first year of the election cycle, like we're in right now, stocks have historically been very solid. During my tenure on Wall Street, 9 of the last 10, or 90% of cycles, have seen this first year of the cycle go up. And not just a little up. We're talking about an average gain of 21% for the broad market during the first year of the election cycle, going back 40 years. Now, that's more than twice the average annual gain for the S&P. We saw this happen in real time during 2021. If you look back at 2021, the mainstream press was issuing one horrific warning after another. And that was because after rising 18% in 2020, most market pundits simply didn't believe stocks could continue to soar when most of the American economy was still in lockdown. But thanks to the election cycle, I knew they were dead wrong. Instead, I knew that year one of any presidency is extremely likely to be a great year. That's why I wrote a note to my followers in February of that year to make sure these fear-driven headlines wouldn't derail their year. I said we are hearing a rising clamor on CNBC from high-profile investors and market strategists for an impending correction. We view any pullback of 3 to 6% as a buying opportunity. And sure enough, despite fears of inflation and the belief that a V-shaped recovery simply couldn't continue with most of the American economy shut down, stocks soared. The big point here is that the data is clear. No matter what's going on in the world over the past 10 election cycles, year one of the cycle has been positive for stocks 90% of the time. In fact, I showed my followers a way to find and get in on many of these best performers, just like I'm about to show you how to potentially get in on the biggest winners of 2025. And the year 2021 was not an anomaly. Going back a little further, you'll probably recall how year one of Trump's first presidency, 2017, was a great year for stocks as well. But big market gains certainly weren't a given if you were listening to the mainstream press at the time. In early 2017, the media was talking nonstop about threats of a conflict with North Korea, how the Federal Reserve's decision to hike rates would crash the market, and how Brexit could send shockwaves through the global economy. But of course, none of that mattered. The market once again defied all the naysayers and delivered gains of nearly 22% during year one of Trump's first term. And once again, there were dozens of opportunities to get into stocks that soared much, much higher than the market. Like I said, the election cycle data shows that stocks have gone up in this year of the election cycle 90% of the time. In fact, there's been just one example of stocks going down during year one of the election cycle over the past 40 years. Despite everything the mainstream press is saying right now about war, inflation, tariffs, interest rates, stock market valuations, etc., we actually have very little to fear this year. Now, could some rare black swan event like a new plague, a major unexpected war, or a natural disaster or major financial scandal come along and tank the markets? Of course. But you can't live your investment life that way. If you want the chance to make money on a consistent basis, you've got to take advantage of the opportunities when the odds are in your favor, like they are right now. Remember, follow the data, not the people who are screaming all sorts of nonsense on TV. Their goal is to say wild things to attract viewers. Your goal should be to avoid the noise so that you have the opportunity to make money. What I've discovered over many decades on Wall Street is that to make the most money with the least amount of risk, you must follow the data. There are always a million things that could go wrong, but the data makes it clear that 2025 is likely to be a very strong year for stocks. This is why in just a minute, I'll share with you one of my favorite individual stock ideas for potential profits as 2025 unfolds. It's a company that's completely disrupting one of the most important industries in the market right now. It's also growing really fast and is already starting to pay off big time for investors. But before we get there, we need to talk about what I mentioned at the beginning of this presentation, what will happen in year two of Trump's presidency in 2026. If we simply look back to the last election cycle, I think you'll begin to see why I'm so confident that the market will crash in 2026. 2022 was year two of the last election cycle. And going into that year, I knew there was a 65% chance we'd suffer a bear market before the year was through, according to data from the last 14 presidential election cycles. I wanted to keep my followers in the market as long as possible to maximize gains, but the moment I saw the crash starting to take shape, I didn't hesitate. In March of 2022, I wrote, "Millions of investors are about to be blindsided by a wave of stock crashes that has already begun, and the actions you take right now could either save or doom your wealth." And sure enough, less than 90 days later, stocks fell into their first official bear market since the COVID-19 crash. $9 trillion of American wealth was wiped out in mere months. Fortunately, I believe my 2022 election cycle warning helped save people a lot of heartache if they acted on my recommendations. And again, what happened in 2022 is not an anomaly. Look at the second year of the election cycle before that. We were just coming off an amazing post-election year for stocks. Trump's first year in office, 2017, finished up more than 20%. But in 2018, I knew a change was likely to come. Jim Cramer invited me on his show where I told him we're going to get a 10% market correction this year, and I expect more volatility ahead. I'm sure I don't have to tell you by now, but that prediction was based on the election cycle, which tells us what to expect in year two of any presidency. And once again, the election cycle and my prediction were exactly spot on. The S&P 500 fell more than 10% in a single month before finishing the year down more than 4%. Now, I want to reiterate one more time that the data shows it doesn't matter who's in office. Year two of any presidential term is statistically the worst stock market year by far for any president, with the highest likelihood of a market crash. In fact, according to a study by Ned Davis Research going all the way back to 1933, the average stock market returns in year two of any presidency are 75% worse than in year one, the post-election year, 80% worse than year three, the pre-election year, and 59% worse than year four, or the election year of any presidency. So why do things happen this way over 100 years of market data? And why is the election cycle so influential on stock market returns? Well, like all great technical indicators, there are many good theories, but there's really no definitive answer, even though this cycle has been studied by practically every big name in finance. Charles Schwab, T. Rowe Price, Morgan Stanley, and Goldman Sachs, just to name a few. One good explanation, I believe, holds a lot of merit, is that presidents like to deliver tough messages and policies in their first year, often to live up to campaign promises. But the effects of those changes don't hit the market until year two. Clearly, with the massive changes that President Trump is making nearly every single day, 2026 is going to look very different for many millions of people compared to 2025. He already has signed executive orders to unleash American energy, establish a Department of Government Efficiency, remove barriers to AI development, and dozens of other initiatives that could send huge waves of capital flowing into the market this year. But the reality is that the expectations of these policies are driving the stock market higher. But 12 months from now, history tells us those expectations could sour dramatically. Another reason you'll see cited for poor returns in year two is that midterm congressional elections, which start in year two of every presidency, create uncertainty about future policies and economic direction. And as you'll probably know, if there's one thing the market hates, it's uncertainty. But again, the truth is that it simply doesn't matter exactly why this market phenomenon occurs. What matters is that data geeks and quants like me have discovered that various years in the election cycle create certain behaviors and elicit predictable reactions in the stock market. And the interesting thing is, these types of predictable reactions and stock market movements have been very similar for more than 100 years. As a result, we know the odds favor a big market downturn in 2026, which is year two of Donald Trump's presidency. But of course, knowing the direction of the overall market is only half the battle. In any given year, you must also know exactly which stocks to buy and what to avoid. In other words, if 2025 is set to deliver terrific returns in the stock market, culminating in a market crash in 2026, what's the best way to play it? It's time to tell you about my secret weapon. I told you earlier that I spent the bulk of my career on Wall Street working for some of the most famous investors in history. But I never explained exactly why all these great investors began knocking on my door in the first place. Now, the short answer will surprise you: data. As I mentioned, back in 1979, I had a breakthrough, creating one of the first daily computerized programs on Wall Street, which generated trade ideas every morning. When folks on the street heard about this, they all came to me asking for help taking their particular methods and implementing a database system which would show them the best opportunities based on their preferred strategies. Before long, I had connections with and backing of some of the world's greatest investors. And I had the resources to do things that had never been done before, developing computer programs for investing, discovering predictive indicators, and then applying strategies based on what I was seeing to make our clients money. I worked closely with the likes of Soros and Cohen to help automate investment strategies based on their individual approaches. This was a major inflection point in my career because I had access to proprietary information working with these clients nearly every day. Soon after, I created one of Wall Street's most famous indicators, which now appears in every Bloomberg machine and Reuters terminal around the world. Along the way, NASDAQ hired me to create 3 new indices, and I started a brokerage company which I ultimately sold to Reuters. I enjoyed great success. I bought 4 new houses during this period, each one better than the last, and it was even written about in the New York Times. But in 2000, I left the street for Connecticut to relax, spend time with my family, and play some tennis. I followed the markets, but figured my Wall Street days were behind me. But then the crash of 2008 changed everything for me. You see, my wife Sandy wasn't ready to retire yet. After working for several years as a vice president at beauty products company L'Oreal, she built her own business in marketing and consulting. And fortunately, her business was still growing in the early 2000s. Despite my Wall Street successes, we managed our retirement funds separately. And Sandy was simply too busy to chase down the best mutual fund of the day. And so she made what was a pretty common and reasonable decision. She handed the care of her retirement over to a professional who actively managed her account. Sandy was busy with her business, and her retirement nest egg was growing alongside it. But then she had an experience that might be familiar to you. Long story short, she lost half her 401k thanks to bad advice from her money manager who kept telling her not to sell. And I thought, gee, I've spent my whole life helping Wall Street get richer while ordinary folks like my wife Sandy are getting fleeced. So I made a radical decision that changed everything. I took 20 of the most important factors I'd witnessed the best investors in the world using to make their stock buying and selling decisions and built a system for everyday folks, which essentially predicts tomorrow's stock ratings on Wall Street today. What makes it so powerful is that if you can know what institutions are about to rate a stock, whether buy, sell, or hold, it can help you determine where huge amounts of institutional money are about to go. This system, which I infused with everything I learned over my 50-year career, is called the Power Gauge. And it's the culmination of my life's work as a quant on Wall Street. And it works incredibly well. In fact, in 2019, my system beat out both Morningstar and Bloomberg for Best Investment Research Product of the Year. Now, along the way, I've attracted attention of CNBC, Fox Business, Investors Business Daily, and even Jim Cramer, who publicly said, I use it constantly and I almost never want to go against it. But the most rewarding part of this process has been my work showing ordinary folks how to use it themselves with stunning and extraordinary results. A guy named Dawson D. wrote to tell me, in just over a year, thanks mostly to using the Power Gauge for when to buy or sell stocks, I've increased the value of my stock portfolio by almost 70%. Thank you from the bottom of my heart for creating such a fantastic tool and for your steady stream of great market analysis. And Greg H. sent the following email. I can tell you I'm so happy to be using Power Gauge Report because it has helped me gain back about $50,000 of losses. Your research product is a fantastic tool for us retail investors, and I use it daily. It was well worth it, and I've made money. Now, these are real results from real people, many of whom have just a basic understanding of computers and the markets. And yet the results they've generated using the Power Gauge have been astonishing. Now, the reason I'm telling you all this is because while the election cycle gives us a high level of confidence that stocks will continue to boom in 2025, with the bull market culminating in a market crash in 2026, the election cycle does not help us sort out the biggest winners in the market from the stocks that will likely deliver losses. That's where my Power Gauge system is a godsend. For example, remember earlier I showed you several lists of the top 50 stocks of various years, such as 2017, 2021, and 2024? Now, can you guess what nearly all of those companies had in common other than being among the market's best performers? Well, it's the simple fact that the Power Gauge flashed bullish on a huge majority of these winners, including 45 of the 50 best performing stocks during the election year of 2024. And that was the case not just for 2024, but for every year of the last election cycle. It flashed bullish on 44 of the 50 best performing stocks in 2023, year 3 of the last election cycle, and 47 of the top 50 performing companies of 2022, year 2 of the last election cycle, despite a major bear market. It flashed bullish on 46 of the top 50 stocks during the post-election year of 2021. And if we zoom in a little further, the results are even more impressive. My Power Gauge flashed bullish on at least 8 of the top 10 performing stocks in the market every single year going back to 2016. In other words, my system was bullish on at least 80% of the top performing stocks in the market every year of the past 2 election cycles, including during 2018, year 2 of President Trump's first term in office, and 2022, which was year 2 of President Biden's term. So you can see for yourself the party in power has nothing to do with the volume of opportunities the Power Gauge can uncover. Along the way, all you needed to know to capture some of the biggest stock market opportunities in all of these years was, first, where are we in the election cycle and what the election cycle tells us is most likely to happen, and second, what stocks my Power Gauge system rated as bearish, neutral, or bullish. But enough about the past. You're tuning in today, I hope, because you want details on what is set to go up most in 2025. So in a few minutes, I want to show you the one investment I love for this year for free just for watching. It's rated very bullish by the Power Gauge, and I expect great things in the coming months. So how much money could you make in 2025? When people ask me how much money I think they could make in 2025, I tell them it's impossible to accurately predict. But the best estimate you'll get is by looking at the data. The previous year 1 of the election cycle was 4 years ago, 2021. That year, the Power Gauge flashed bullish on NVIDIA before it soared 53%, Ford Motor before its stock rose 69%, and 4T-net before it gained 145%. The year one of the election cycle before that was 2017. And the power gauge flashed bullish on NVIDIA again before it soared 125%, NVR Inc. before it gained 121%, and IPG Photonics before it rose 191%. So while it's impossible to predict exactly how high the market could go this year, that gives us an idea of the kind of gains the power gauge would have alerted you to in both these years. Remember, the big picture here is straightforward. Get invested in the best opportunities now to potentially make great gains over the next 12 months or more. Then as we move into the middle of 2026, we'll do the same thing we did in 2022. I went into 2022 knowing that there was almost a 65% chance of a bear market before the year was over. And the same is true for next year. I know this because in the previous 14 election cycles, there were bear markets 9 times in year 2. Think about that, 9 times out of 14. So when I saw the crash starting to take shape in the power gauge in 2022, I issued a clear warning for U.S. stocks. We showed that a 20+% drop was not only historically possible, but expected. And sure enough, less than 90 days later, stocks fell into their first official bear market since the COVID-19 crash, and $9 trillion of American wealth was wiped out in mere months. Next year, in 2026, we'll follow the same script yet again. We'll know going into the year that a big market crash is extremely likely. So we'll watch the power gauge carefully to determine exactly when to begin getting out and potentially book big profits. Now, when exactly will the market fall of 2026 occur? Well, when you look at the election cycle over the past 60 years, the stock market low in nearly half of those years occurs in 1 month, October. In other words, that's about when we can expect next year's bear market to end. The million-dollar question then is, when will the next year's bear market begin? Take a look. What you're looking at is the seasonally adjusted average stock market performance every year 2 of every election cycle going back to 1994. And as you can see, on average, the market hits its peak in the middle of March and stayed in a bear market all the way until October. And so the most likely month for the next bear market to start is March of 2026. And the most likely day for the next bear market to start is Monday, March 16th. Now, let me be clear. I am fully convinced that stocks will continue to rise in 2025. I am also fully convinced that stocks are very likely to have a severe downturn in 2026. And simply by looking at historical data, we can guess that the most likely date for this downturn to occur, based on more than 100 years of stock market history, is March 16th. But please keep in mind, predicting the exact day the market turns more than a year in advance is nearly impossible, even if you're using the power gauge. The exact date the next downturn begins will depend on many events that transpire over the next year. But the good news is, and you and I don't have to worry about the exact date right now. All we have to do is track the power gauge, which I will analyze to determine exactly when to alert you to get out of stocks. Now, I know that sounds hard to believe, but this is exactly what happened during the bear market downturn of 2022, and it's exactly what happened during the COVID-19 crash, and it's exactly what happened when we saw the market crash of 2018, year 2 of President Trump's first term in office. And it's exactly what we can look forward to next year as well. Even better, while most people are trying to figure out whether to hold their quickly falling positions, we'll use the power gauge to do in 2026 exactly what we did in 2022. We'll look for market sectors that have historically popped during market downturns so we can continue to potentially make some money while we're waiting for the overall market to recover. During the downturn of 2022, for example, my power gauge turned bullish on the energy sector, which jumped 20% overall as the market fell. And along the way, my power gauge system flagged bullish on all 10 of the year's top 10 performing companies. Now, where will the best opportunity be in the downturn of 2026? That's impossible to say right now. But again, the good news is you don't have to worry about it. I'll be analyzing data from the power gauge to decide exactly when and where to go. The point is, you don't have to worry as much about losing years if you, number one, understand what's coming to the U.S. stock market as per the election cycle, and number two, know exactly which stocks to buy and avoid using the power gauge. But let's not get too far ahead of ourselves right now. There's a lot of money to be made between now and the 2026 stock market peak. Remember, the power gauge has identified at least 8 of the top 10 stocks of the year every year for the past 9 years. And I don't want anyone watching right now to miss out on the big gains over the next year due to misinformation, media noise, or misdirected fear. So I've essentially done the heavy lifting for you. I've used the power gauge to create a short list of the best stocks you should buy today, which could all potentially double in value or more very quickly. There are 9 companies on this short list of stocks as of today, but we'll add to and trim this list as opportunities arrive. And the only place to get this list is my world-renowned research service called the Power Gauge Report. Investment success is all about what's coming next, and there's simply nothing like Power Gauge to help you find what looks set to become the next wave of future winners. For example, the Power Gauge flashed bullish on NVIDIA in early 2023 before AI was making headlines, Novavax in late 2019 before the first COVID-19 lockdowns, and GameStop in 2020 before retail investors pushed it sky high, and then finally Riot Platforms before Bitcoin crossed $60,000. Remember, these are some of the best recent stock market examples, and not every trade will be a winner. But for more than a decade, the Power Gauge has helped me find the market's biggest opportunities year after year, in bear markets and bull markets across every sector, industry group, and little-known corner of U.S. stocks. Which is why today I'm opening the doors to my Power Gauge work like never before, and offering you the chance to give it a try at a huge discount without risking a single penny. Here's the deal. I truly believe that once you start benefiting from the Power Gauge, you'll never go back. You'll never want to buy any stock without it ever again. In fact, that's exactly what reader Charles P. told us. He said, "I successfully managed my retirement account with this. I tried many programs over the years and have literally spent thousands of dollars. None has been as easy to use or reliably accurate. In today's market, this information is a necessity. I wouldn't invest without it." And one of my long-term followers, Greg W., adds, "Quite honestly, this is hands down the most amazing system that I've ever seen. You've brought a new excitement back into my trading. Keep up the good work. And also, I'm in the process of canceling some of my other subscriptions, and it feels great. Chaikin is a perfect fit." Now, with feedback like that, you can see why institutional investors have paid our firm up to $5,000 each month to access our software and recommendations. And consider this, if you wanted to access some of my tools through a Bloomberg terminal, you'd have to pay $24,000 a year for the privilege. But today, we're offering a 100% risk-free trial to everything I detailed here. For starters, you'll get our full model portfolio of the highest conviction investment recommendations we have right now in our Power Gauge Report service. We typically have between 8 and 10 recommendations in the model portfolio at any given time. As you'll see, we purposely keep the model portfolio trim. We don't want dozens and dozens of recommendations. The way we run the Power Gauge Report, you won't have to guess which of these businesses are our top buys. And you won't have to choose among dozens of old recommendations. Simply buy all of our recommendations right now with equal amounts of money, and I believe you'll do incredibly well in 2025. Again, this is the short list of stocks that gives you the best advantage in the market frenzy we're likely to see in the months to come. Today, you've been handed one of the most potentially lucrative opportunities that the U.S. stock market will ever give you. And this short list of recommendations is the perfect way for you to take advantage of it. Every month in Power Gauge Report, I'll give you an update of the biggest opportunities lighting up in the Power Gauge, and I'll explain exactly how the markets are moving in terms of the election cycle. And every month, I'll issue a new recommendation vetted with the Power Gauge to help you take advantage of the biggest opportunities. The Power Gauge Report is also where I'll signal that it's time to sell and lock in any profits on our stock positions. For example, when I do see the first signs of a market crash in 2026, as the election cycle is predicting, the Power Gauge Report is where I'll notify you about it. And this is why today we're offering a 100% risk-free Power Gauge Report trial and a dramatic discount. Normally, access to the Power Gauge report would cost you $499 per year. But today, we're giving you the chance to try our Power Gauge report totally risk-free at a huge discount to the normal price. It's one of the best offers we've ever made, because not only will you pay dramatically less than the normal price, but you can give it a full try for the next 30 days without risking a penny. Within minutes, you'll have access to your new recommendations, handpicked by me, using the revolutionary Power Gauge. And if you're unhappy for any reason, you can get a full cash refund in the next 30 days. No strings attached. If you're eager to get started and want to be among the first new subscribers to get in on these recommendations, simply click the button below, which will take you to a page that summarizes everything included with this offer. As you'll see, there's so much more I want to share with you too, including 3 huge free bonuses that could help you make a lot of money in the months to come and avoid the biggest losses. We're including all 3 free bonuses when you take us up on this discounted offer. In addition to the model portfolio of Power Gauge stocks we recommend you buy immediately, there's another unique opportunity I want you to take advantage of. You probably won't be surprised to learn that it has to do with artificial intelligence. Now look, I've been in the markets for decades, but I don't remember a topic this hot since cryptomania in 2021 or internet stocks in the late 1990s. I'm seeing and hearing about AI everywhere these days, and I bet you're experiencing something similar. Old friends are calling and emailing me out of the blue. They want my take on the situation. Fox Business asked me during a TV appearance to share my thoughts on AI. Now, one thing I've learned over the years is that to make the biggest market gains, you must pay attention to the biggest tech developments. Most people don't realize that the top 5 stocks from 1990 through 2020 were all tech-related companies. Together, they were responsible for creating more than $7.8 trillion in new American wealth. The point is, no matter where you stand on tech and AI, it's clearly an incredible investment opportunity and by far the hottest new technology in the world right now. But the Chinese startup company called DeepSeek changed everything earlier this year by proving you can produce great AI tools cheaper and with less computer power than everyone thought. There are huge shifts coming in the AI sector, and everything you need to know for the chance to profit from AI over the next year and beyond is in our detailed report called Chaikin's AI Power Picks. I'll show you exactly which 3 stocks to buy, what price to pay, and how we'll know when to exit these positions. Order now, and you'll get your copy of Chaikin's AI Power Picks in your hands in a matter of minutes. Just click the link below to get started. Now, of course, eventually this AI frenzy and the market boom of 2025 will come and go. But then there will always be a new stock and a new trend positioned for extraordinary potential gains, which is why I want to give you another huge bonus when you start with us today. If you join me right now, I'll also give you a year of free bonus access to the Power Gauge system itself. It's a simple-to-use version of the Power Gauge rating system that we designed specifically for new users. And for the next 12 months, you can type any ticker into my straightforward system and immediately know if it's rated bullish, neutral, or bearish. You'll get all the analysis and signals I've shown you today, just without all of the complex tech bells and whistles that my institutional clients paid $5,000 a month to access. This is perfect for regular people who don't want to be spending hours sitting at their desk all day. In fact, we frequently get feedback from new users about how quick and straightforward it is to operate. Richard K. says, "I've saved countless hours by always consulting the Power Gauge. Your recommendations never let me down. I will be a subscriber for many years to come." David R. tells me, "The Power Gauge is my go-to tool. I especially like how easy it is to find winners." And Doran H. wrote me to say, "I love your Power Gauge data. This works even for an 80-year-old subscriber." These are my favorite kinds of compliments to receive because I built this system for ordinary people. You shouldn't need a PhD to do well in the stock market. For example, for stocks you already own, within seconds you can check whether we see good or bad days ahead. And you can access the system on your computer, your smartphone, whatever works best for your life and your money. Remember, with the power gauge, you could have known when to buy the best performing stocks of 2023 and 2024. It gave tech juggernaut NVIDIA a bullish rating before it soared 128% in 2023 alone. Beloved AI infrastructure stock Vertiv before it shot up 253%, cruise line Royal Caribbean Cruises before it jumped 96%, and home builder stock Builders First Source before it skyrocketed 134%. And last year in 2024, the power gauge flashed bullish on financial services company Robinhood before it rose 108%, Supermicro Computer before it shot up 180%, and it flashed bullish on electricity generator Vistra before it soared 255%. The power gauge, as I've said, is my life's work. It's attracted major media attention and hundreds of thousands of followers, like trading guru John Carter, who's famous for making $1 million in just 2 days trading Tesla and loves using the power gauge. He writes, "There's a lot of hyped up tools out there, but a single tool that combines 20 fundamental and technical factors to anticipate a stock's profit potential got my attention. It's like an objective, awesome meter for stocks. Order right now and we'll give you free access to this system when you join my breakthrough research service, the Power Gauge Report. When you act through today's special offer, you're getting an incredible discount, including free access to our model portfolio, plus our report on the best AI stocks to buy right now, and a full year of access to a light version of the Power Gauge system. And there's more. We've prepared another incredibly valuable bonus I haven't even talked about yet. You see, the Power Gauge not only helps you find the best stocks to buy, it also helps you avoid big losses. One recent example, Apple is one of the greatest stocks and companies of our era. But even great companies can become terrible investments if you buy at the wrong time. And on January 10th of this year, the Power Gauge flashed a very bearish rating on Apple. Not surprisingly, the company fell 8% over roughly the next 3 weeks. When we received this very bearish warning from the Power Gauge, we dug into data and found serious issues. As we wrote at the time, unfortunately for Apple, growth is in question right now. Its augmented reality Vision Pro headset was a flop, and iPhone sales in China fell roughly 8% in 2024. And worse still, Apple is facing an iPhone sales ban in Indonesia. Now, will Apple eventually turn things around? We expect it will. But we know our readers find it extremely helpful when we can show them that a downturn could be coming in a stock they're likely to already own. And that's why I also want to send you our current list of 3 very popular stocks you should avoid right now. I scanned all of the bearish ratings in the Power Gauge to isolate the 3 tickers we predict are both likely, widely held, and headed for the worst destruction. Everything you need to know is in our special report called 3 Wildly Popular Stocks You Should Avoid Right Now. It's very likely you already own at least one of these companies in your portfolio. So I absolutely recommend you sell or avoid these in the months to come. I published a similar list of stocks to avoid at the beginning of 2024. And even in a year when the stock market soared 22%, if you are holding some of the companies I warned to avoid for 2024, it could have led you to big losses. Companies like biotech firm Bio-Rad Laboratories, which dropped more than 20%, Starbucks, which crashed 22%, and chemical manufacturer Albemarle, which plunged nearly 50%. That's why I want you to get my list of 3 widely held stocks to avoid for 2025 in your hands right now. Everything you need to know is in my brand new report, 3 Wildly Popular Stocks You Should Avoid Right Now. To get started with everything I've described here, simply click the Get Started button below, which will take you to an order page where you can get all of the details before placing your order. Again, this offer is 100% risk-free. You can get access to everything I've described so far in a matter of minutes. And if you change your mind in the next 30 days for any reason, no problem. Just contact my Maryland-based customer support team and they'll issue you a prompt refund. No questions asked. But I seriously doubt you want a refund. Once you see why folks like Bob Lang, an equities trader and frequent guest on CNBC, and Jim Cramer's Mad Money once said, "In all of my years in trading, I've tried many different styles and approaches, but Chaikin is one system that stands out head and shoulders above the rest." You know, one thing I love about the work my team and I are doing these days is that I hear not only from investment pros, but regular folks who've taken money away from lackluster advisors, much like my wife Sandy did years ago. For example, I got this note from Derek W., a subscriber of another one of my elite research advisories. He recently used the power gauge to move his money away from an advisor and take control of his own financial future. He told me, having the power gauge on my side has helped me navigate the market declines and bank failures, even beating the S&P and NASDAQ during that time. I believe that having Chaikin Analytics as part of my investment journey will set myself and my family up for financial stability and retirement with peace of mind, hopefully earlier than most. You know, one thing I'm really worried about for our country in the coming years is that the wealth gap is going to really accelerate between those who understand the lower risk ways to grow their money in the markets and those who don't. That's why I sometimes call the power gauge the great equalizer. It can radically improve your financial situation no matter how much money you're starting with or how much you make. Now, let me give you the details of one of my favorite investments right now. Selected from a short list of stocks ranked very bullish by the power gauge. My number one recommendation right now is a company called Robinhood. It's a relatively new player in the stock brokerage business, which lets people also buy cryptos and even fractional shares of big companies. In short, it's the investment brokerage for the next generation. Wall Street experts expect the Trump administration to relax financial regulations, and we're still just at the beginning of a trend that will allow regular folks to buy shares in everything. Robinhood will be a huge beneficiary for a long time to come. Just look at the recent growth in the company's assets and look at how much average revenue per customer is soaring higher. The company has figured out how to make twice as much money per user in just the past few years, and I think this stock is going much, much higher over the next year or so. I love the idea of owning one of the best brokerage businesses in America. Today, Robinhood reminds me of a younger and newer version of the brokerage firm Interactive Brokers, which also helped change the ways that brokerages operate. Interactive Brokers is up 300% in less than 3 years, and I wouldn't be surprised one bit to see Robinhood exceed those returns in the years to come. The power gauge gives Robinhood an extremely bullish overall score based on the financials, the company's earnings, the stock's technical movements right now, and expert analyst opinions. Action to take, I recommend you buy Robinhood stock, symbol HOOD, today. Based on what I'm seeing in my systems, I predict it will be among the top performing stocks of the next 12 months. I hope you take advantage of not only Robinhood, but all of the other opportunities I've talked about today. Remember, the only place to access everything described here is the Power Gauge report. Order right now for a massive discount off the regular price. You'll get full access to our model portfolio of the best stocks to buy now to take advantage of the final frenzy of this bull market in 2025. Plus our report called Chaikin's AI Power Picks, detailing the world's 3 best AI plays right now. Plus free access to a light, easy-to-use version of our Power Gauge system called Power Gauge Rating System. Plus monthly updates and recommendations on exactly what to do as this bull market comes to an eventual end in 2026. Plus free access to our special report on 3 wildly popular stocks to avoid in the dramatic weeks to come. And there's actually one additional free bonus I want you to have as well. It's an exclusive mystery gift we didn't have a chance to dig into today, but it could be absolutely transformative for your wealth in the weeks ahead. Others recently paid as much as $2,499 to access this in person, but you'll get it free of charge when you act now. Just click the button below to see all the details. It's an extraordinary offer we put together today for an extraordinary moment in the markets. Remember, you need to know how to best take advantage of the frenzy we're going to see in 2025, and then you need to know exactly when to start taking profits in 2026. There's no better way to do this than by following the Power Gauge report. But if you want to take advantage of this offer, you must act now. You'll lock in instant access to all of our new recommendations, 12 months of free access to our predictions, warnings, and research, and even the software platform that's essentially been my life's work. All you have to do to get started is click the button below. Just remember that all investing carries risks, and you should never risk more than you're willing to lose. Our average 2-year gain in the Power Gauge report is 8.4%. And as one of our long-term followers, Paula B., said, I had little left to live on and invest in the market, so investing in a Power Gauge subscription was a risk. It does, however, give me confidence in investing, and it's paid off. I really couldn't invest without it. We're opening up the doors on our research today at a very critical time. Most Americans are likely to make two big mistakes in the markets in the months to come. They're going to miss out on big gains still in store for 2025, and they'll most likely get hurt badly by what we believe is the inevitable fall in 2026. Get started today with the Power Gauge report, and you can potentially make a lot of money and avoid these mistakes. Click the Get Started button below to go to our secure order form where you can review everything once more before submitting your order and gaining access to everything we talked about today in just a few minutes. Thank you so much for watching. I hope to see you in the Power Gauge community soon. Be well.